The U.S. economy has consistently defied expectations of a slowdown since the Fed started raising interest rates in March of 2022. Economists and market participants alike initially expected growth to slow as the Fed raised interest rates. However, it has been now nearly 3 years since the Fed's first rate hike, and the economy continues to grow at an above trend rate. While higher rates have slowed housing demand and weighed on business investment, the U.S. economy has managed to defy expectations with solid GDP growth. This chart here shows the U.S. economy grew at a 3.1% annualized pace in the third quarter of 2024, marking the third quarter in the past four with growth above 3%. Now, these next two charts I'm going to show you, they're going to show the key drivers of economic growth since early 2022. This chart that you see on your screen right now tracks the contribution of personal consumption expenditures, i.e., consumer spending. It's going to track that to U.S. GDP growth. Despite high interest rates, consumer spending has remained a steady driver of growth in recent quarters. Now, multiple factors have increased household net worth and bolstered consumers' financial strength. I mean, we're talking about record high stock prices, rising home values, and solid wage growth. Additionally, many borrowers locked in low interest rates during the pandemic, which has made the U.S. economy less sensitive to rising interest rates during this cycle. Now, this third chart here shows the surge in manufacturing-related construction in recent years. For a long time, manufacturing construction was relatively modest, as most activity was outsourced to China, Mexico, and elsewhere. However, that changed in late 2021, around the time where Congress passed trillions in new spending on infrastructure, green energy, and subsidies to incentivize U.S. manufacturing. These spending bills have been extremely supportive of the U.S. economy and created a boom in the manufacturing of semiconductors, electric vehicles, batteries, and solar panels. The result is a surge in manufacturing-related construction, the largest on record, in fact, as companies build new warehouses, industrial facilities, and semiconductor plants. The artificial intelligence industry's emergence has provided another catalyst as companies like we just talked about, Microsoft, Amazon, and Meta, spend billions on data centers, information processing equipment like semiconductors, and energy production to meet growing power demand. Economic growth, it is forecast to slow, but remain solid next year, driven by the Trump administration's pro-growth policies. The new administration's policy agenda focuses on extending the 2017 tax cuts, reducing regulations across industries, and boosting domestic manufacturing through targeted incentives. These measures have the potential to stimulate capital expenditures, expand manufacturing capacity, and attract foreign investment to the United States.